Hi, how are you? First of all, please, it's very important that you help me to continue creating content. Subscribe to the channel. Securities and Exchange Commission rejects Bitcoin spot ETF release, citing uncertainties. American Autarchy said that exchange operator C.B.O.E Global Markets failed to prove that this market would not be subject to manipulation or fraud. The Securities and Exchange Commission rejected fund manager VanEck's request for approval of an E.T.F, exchange-traded fund, in Bitcoin spot. Currently, only cryptocurrency futures ETFs can be traded in the United States. In a 51-page decision, the Securities and Exchange Commission said exchange operator C.B.O.E Global Markets, which aimed to list the ETF, had failed to prove that the Bitcoin spot market would not be subject to manipulation or fraud, and that it could be properly monitored with a surveillance sharing agreement with the exchange. VanEck was one of several fund companies that tried to get approval for a cash-based ETF after the Securities and Exchange Commission's recent green light for two Bitcoin futures ETFs, the ProShares Bitcoin Strategy ETF and the Valkyrie Bitcoin Strategy ETF. The C.B.O.E argued that it would be inconsistent for the Securities and Exchange Commission to approve ETFs based on futures, but deny a cash ETF Bitcoin based on the same asset. The Securities and Exchange Commission rejected this argument, saying that futures ETFs were registered under a different law, the Investment Company Act of 1940. A spot ETF would face higher hurdles under another 1934 law, in part because the Bitcoin futures market is regulated and can be monitored, while the Bitcoin spot market is globalized, decentralized and unregulated, making it very more vulnerable to manipulation and much more difficult for surveillance. Thank you very much. Subscribe to the channel. See you next time.